Good Thursday morning, traders. Steve Ganz here, and I found another interesting trade that I think would be a good educational trade for people to make in paper. I'm going to walk you through this. I'm going to share the link with you so that you can open it up yourself in OptionStrat and check it out. Now, this is a butterfly on GE. So it's 1 week out. It doesn't expire until next Friday, June 13th. So what was it that kind of drew me to this? And people ask how I find these trades. I just start pouring through a bunch of different symbols and things in the morning, looking at charts, etc. And in this specific case, I ran across the chart of GE. And as we can see, GE's had a massive up move. And it also looks, it is overextended based on RSI. It's pushing on the top of the Bollinger Band. But it has done that before too and still rallied through it. But I'm feeling like right now this might be getting a little bit exhausted, but I don't think it's going to necessarily drop back down. It's got so much strength. So I'm thinking it might trade sideways a little bit. So I went out and I looked at largely delta neutral trades. I looked at some iron condors, some butterflies, etc. The one I liked was the iron butterfly here, because it gave me a really good reward to risk ratio. So what do I mean by that? What I mean by that is that on this $5 wide iron butterfly, we got $5 wings on the call side, $5 wings on the put side. That gives me a range here of roughly $10. I am able to sell that. In this case, I sold that for about $3.99. So I'm picking up almost $4 in credit on a $5 wide wings, which again gives me a $10 wide area that I can play in. So that means that my max loss on this trade is under $100 per butterfly, and my potential profit is slightly over $400. Now that's if this were to expire right at the peak. I'm not looking for that to happen. That's not my goal, not my objective on this. But this will decay quite rapidly. It's going to decay at the rate of $4 a day. Today, that speeds up as you get closer and closer to expiration. And it also has a slightly negative delta. Why do I like the slightly negative delta? The sheer nature of a butterfly means that it actually performs slightly better if the market pulls back a little bit. If I look again at that chart, what's likely to happen here, again, might be just a little bit of a pullback, not a massive pullback, but a little bit of a pullback or a stall on this. So I feel like that might play into my favor here as well. So those are all the different things that I looked at. Again, with the reward to risk ratio probably being one of the biggest factors in this, the fact that I could get that $4 on $5 wide wings, huge good potential entry if this thing stays in its range. So how do I look at these? I want to look at maybe getting 10, 15, potentially 20% out of a trade like this. So I'm going to look for GE to trade in this general range, maybe until next Tuesday, Wednesday, something like that. At that point, my T0 line should be mounted up into here somewhere, and I should be able to pull out an easy 15% or so on this trade. Again, every trade I share here should be a trade that is paper trade. It is for educational purposes only. Now, I do also want to take a quick look at possibly that Walmart trade that I had suggested last week. So the Walmart trade, this iron condor, it's suffering a little bit here today. Now this expires tomorrow. So I would watch for this if Walmart maybe rallies back up in here to this $99 range or so. I should be able to take that off maybe for 15, 20% in profit. Right now, I only did a one lot on this. It's up 11%. Earlier today, it was up 20%. So, it could be taken off. Another thing I could do if I were in this trade live is I could potentially adjust this now. I could potentially move this a little bit closer. So I could bring that down, that call, that short call, bringing more premium into this. Now, I'm not going to do that because I'm not a fan of doing that this close to expiration. The gamma just gets too high. But that is a way that this trade could potentially be adjusted. If that were to happen, that would reduce the risk on the downside. But if I only moved the call closer, I have to understand if I don't move the long call as well, if I just move this one in a little bit closer, that's going to give me more downside risk. So I could move both of those in as well and essentially turn this more into a butterfly. So those are the types of things that options traders need to look at and consider. Again, me personally, I'm not going to mess with it, but that is a way that, again, if you're doing these trades in paper, you should play with things like that. You should save a version of this trade just exactly as it is, and then make that adjustment, and then go in and create version 2 of this trade. Study the two, see how they compare and contrast once it all wraps up. So that's it for today, everyone. Take care.